Hey, my name is Ash Shukla, and welcome to Financial Chakras Abundance to Alignment podcast. And today we are going to be talking about real estate and how to become a millionaire using real estate. And my friends, many times we wonder there are lots of people. If you look at anything that has made more millionaires and perhaps even more billionaires than anything else in the world, it's actually the world of real estate. And that's why we have a podcast guest who specializes in real estate. And I thought it would be a great conversation to have in order for you to learn how to be a millionaire using real estate. So please help me welcome Dave. Hey, Dave, how you doing, buddy?
I'm well, Ash. How about yourself?
I'm doing good, my friend. Thank you. And my friend, first of all, I want to say thank you so much for taking a moment and just appreciate you very very much for being here. Okay.
Well, thank you. Thank you for
Yeah,
inviting me.
you're so welcome. Okay. All right. So I figured we start with the conversation of just tell us a little bit first about where you are, right, and who you are, my friend.
Sure. So I'm in Tulsa, Oklahoma. I'm the no money millionaire. And so I'm David Webb, the no money millionaire. I teach people how to buy real estate without having to have or use their own money to do so.
I love that. Okay, so let's talk for a second, right? Because you guys, you see those of you are listening, I want you to know you can see why I invited him because he's been doing this for a long, long time. Okay, and more importantly, I was impressed when I had a previous like a pre-interview conversation with him, and I figured it's a great conversation to have with real estate. So typically, when you focus on real estate, Dave, like, do you focus on residential or more do you focus on commercial?
Um, I started I started with residential. And
Mhm.
one of my properties that I bought, it was partial. It was what they call mixed use. It had 4 stores on the bottom floor and then 16 apartments upstairs. But that's the only one that I have that would be anything near commercial.
I see. Okay.
Yeah,
All right.
yeah.
Okay. All right. And so why do you choose real estate as a primary way to do this versus like and why not like some people would choose trading, some people would choose
Sure.
other ways. Why real estate?
Um, I always had an interest in real estate for some reason, owning properties. I when I was young, when my son was born, I was
Okay.
young. I was 20 years old, and I was renting this little tiny studio apartment. I think maybe it was 300 square feet. Maybe it might have been a little smaller than that. And
Okay.
I was there one day, and I saw this guy. He came up. He was young, and this was an apartment complex. There were probably maybe 30, maybe about 30 apartments in this complex. And this young guy walked up as I was outside, and he introduced himself as the new owner of the complex. And, I probably, he was probably late 30s, maybe he was 40, but, he still looked pretty young. And I just saw that and I said, I want to do that. I didn't know how to do it. I grew up in Detroit. It was very poor, and there was nobody that was ever teaching or showing me how to own property or talk. I didn't know anybody who owned a house, and so it took me a long time to figure it out actually how to get that apartment complex.
Wow. Wow. Okay. So your passion for delivering or teaching people how to own real estate, where does it like where did it like actually inspired you to say, okay, you know what, I know how to do this now, and how long it took you to master the skill of like really because like somebody like me, I know nothing about real estate whatsoever. I have no
Sure.
idea where to even start. And the I think the only thing I own as far as having real estate or of any kind is a screwdriver, and that's about it.
Okay.
So if you're teaching somebody
That's a
like
start.
me, it's a what would you say to me? I guess, well, how would you teach me?
I speak with everybody individually and kind of find out their what they have. You have to look at each individual and see, is it somebody who actually has capital and just wants to invest and get a return off their capital, then we proceed in that certain way. Or
Oh,
is it somebody that's coming up like I did, and struggling and trying to find their way and didn't really know what to do? Well, then, and maybe they don't have capital, maybe they can't, use the banks, all these different aspects that would be necessary. Well, then we structure that differently. Maybe start trying to do some fix and flips and build up their money so that they can then start deploying capital and have their money make money for them. So I just look at each person individually and find out what's going to suit them best and what they have available to them.
yeah, and that's amazing. So basically, you have flexible ways to work with people,
Sure.
whether they have a little bit of money, a lot of money, they want to have physical property, not have physical property, just depends on how they really want to go about it, pretty much, right?
Definitely. Yeah.
Correct? Okay, all right. And when it comes to David, like when it comes to, let's say that somebody is just starting, okay?
Okay.
Is there a budget or something that they should think about? And is that correct? Credit score requirements that they would have to start this whole project? And I'm going to assume if they don't have credit, that's going to be pretty bad. I'm going to assume if they don't have any money, that's going to be pretty bad,
Right.
right? So what should people think about before they even jump into this?
Well, again, they have to look at their situation, and if they do have, low capital or no money, if they do have, bad credit, there's still stuff available to them. I just helped somebody get a triplex, which is 3 apartments in one property. They didn't have credit, they didn't have a down payment, but they were able to find a property that the owner was doing a seller finance.
Mm.
And this particular person negotiated doing some handyman work in exchange for his down payment. And so he was able to um, buy the property without any money. And the day he closed, the other 2 units were paying him rent. So he went in with no money and was collecting rent from the day he closed.
The day he closed. Whoa,
Yeah. Yeah.
that is like wow
Yeah.
moment. I
Yeah.
love that. Okay,
Yeah.
and by the way, I wouldn't be able to make that negotiation potentially because I cannot do any handyman work. So that would be out of my league. but that
Sure.
be
Sure.
so. What would you say it's a bad idea if somebody is going, because a lot of times we hear a lot of real estate moguls and say, oh my God, you can do like all these things, and people take risk, right? And
Yes.
sometimes is unnecessary risk. I believe that whenever you're doing something, especially investment or even in life, there is general risk. Okay, and I think people sometimes overlook risk. And the question is, what are some of the risks that you have seen people take and not turn out so great for
Of
them?
course.
And
Of course.
what should they really avoid?
Well, I mean, anytime you're using your money or other people's money and there's going to be some risk involved.
Yeah.
And, whether it's, stocks, the market, anything, there's some risk involved. And with real estate, there's, one of the lessons that I learned, and it was an expensive lesson,
Mhm.
is, you know, money in real estate is really made when you buy the property, not so
Mm.
much when you sell it. If you don't buy it right, you're not going to do well when you try to sell it. And so, I was taught that. I bought an apartment building, and I was going to sell it. And the realtor said to me, he said, Dave, he said, you make money when you buy, right? And I knew what he was telling me. I knew that, and that was just my learning process along the way. And I ended up losing a good amount of money on that property. So, there's risks in not buying it properly. And then if you're going to, let's say, if you're going to do some renovations, if you underestimate the amount of money it's going to take to renovate it, to get it to sell, and that's a problem. If you run out of money, let's say you anticipated it was going to be X amount of dollars, and that was all that you had, and then it exceeded that. Now you have a property that's not fixed. It's going to be hard to sell it. You've used all your money. There's a problem there. And then one that I see people miss, or they don't take into account well enough, is when they do fix up a property, they just assume it's going to sell right away. but sometimes that property may sit on the market for 90, 90 days, 120 days. And did they take into account those 4 months of not getting their money back or paying on the loan or whatever it is that it took to get the property? Did they anticipate having to hold it that extra 3, 4 months or more? And so there's all kinds of risks, but you can definitely, do your best to mitigate them. And I think being well prepared and well researched and going into it thoroughly can help offset a lot of those risks.
Absolutely. I 100% agree with you there. Because I feel like, there's a risk, obviously, on to everything,
Sure.
no matter what, right? For that matter, this podcast, there's a risk because we could lose our lights or something of the nature, and that's a
Right.
risk, right?
Right.
Yeah, essentially. But that being said, I think that when people are going into this, okay, how should they prepare so that they're comfortable with that risk that they are taking?
Well, I mean, you have to figure out your comfort level, and how much money you plan to actually put with that risk. Are you going to use 100% of your money and you have no, safety net for failure? Or you're going to you're going to use just enough money where if something did go wrong, you're still able to maintain your situation and try to continue. So you have to figure out your comfort level of, and that comes with really any investments. I don't invest in the market and I don't invest in other areas, but in any of those markets, you have to decide how much you actually plan to use for investments and what your comfort level is for that. So, I wouldn't advise anybody use 100% of what they have. And then if something goes wrong, they don't have, a plan B or a safety net. So that's not the proper way to proceed. But, you know, um, if you can use enough so that if something did go wrong, you're still able to continue, the course that you've been on, then, I think that's a fair way to gauge it.
Okay. And so let's say that in this case, let's say somebody has $0, right? And they go in with that kind of that property deal you explained
Yeah.
earlier.
Yeah.
So if they make that kind of a deal, right, wouldn't they be going under at that point because they're paying for all these things that they're not expecting, or would that be all covered by the owner, I suppose?
Well, you have to. So almost every property that I look at, I look to find property that needs work. That's called value add. And that's what
Right.
I look for. I don't want to buy a property that doesn't need to be renovated.
Right.
Uh, for my situation, that works best. For somebody else's situation, you may want to find a property that's all renovated. You don't have to do any work. You'll have less upside potential, but you have almost guaranteed income. Might be less, but it's a guaranteed. It's already set in stone. Maybe it has renters already. You don't have a whole lot of risk there. But with mine, I always look for properties that need to be renovated. And when I look to buy a property, I look at that renovation. I create the budget. I then build the budget into the purchase price. And so that capital, whether however you acquire that capital, whether it's private money, bank money, whatever you're using, whatever your situation is, allowing you to use or you choose to use, that renovation budget is usually built into that.
I love that. I love that. So realistically, whenever whatever you're doing, number one thing that somebody should do is what you're saying from an alignment point of view, making sure that they are truly understanding what they're getting into. Number
Of
one.
course.
Okay.
See, yes.
Number two, they should understand their risk tolerance, meaning, do they want a lot of profit, meaning buy rundown properties and fix them
Yes.
up and then rent them out, right?
Yes.
That produces higher return,
Yes.
but there's also higher level of risk because it's going to require potentially out of pocket cost that you are not expecting.
Right.
Like ABC, XYZ, whatever the out of pocket cost is. Or are you more of a safe kind of person? Say, okay, I bought this, I know it's all good to go. and it's going to make me money, and that's all you're looking for, real estate,
Exactly.
right?
Exactly.
So those are the things you're looking for, but then comes a upside potential. Okay, so when it comes to, so we talked about risk, the upside potential between two of them, which one makes out better in the long run, if you look at both?
Yeah, if you take a value add property and it all comes in, for what you had anticipated with the rehab budget and all of that, you're going to have a lot more upside potential there. When you buy something that's already renovated and
Hmm.
and rented or whatever your plan to do with it, it's pretty much, again, you have to buy it right. It goes back to what I said. If you don't buy right, all of this can be a problem. But once you've done your research and you see that you're buying this property at a good deal, and if there's no renovation required, then it's just going to be kind of easy money for you. It probably already has a renter in it. You're not going to have to do much. And that's just going to be a nice set. And it'll go up in value according to like the area and um, the general growth of that area, and
Right.
3%, 5%, whatever that may be. But when you have value add, and now you have a couple different opportunities there. If you are able to do the renovation yourself, then you're going to really keep the budget low. And then you're going to put that in and you're going to be able to raise the value. A lot of times when you buy a property that, needs renovations, it's unsightly. It's an eyesore. And you usually have a little more bargaining power with that. A lot of people aren't interested in it, and so maybe it's not selling quickly. It's been on the market a long time. You can come in and say, I'll offer you this for it, and you can usually maybe buy it at a much lower price, and then do the renovation, keep your renovation low, and then you have a lot of upside potential. So if the value add works out, well, then that's definitely going to give you your higher upside.
I see. Okay, so if the value add, okay, so the key factor there is a value add,
Yeah,
making sure of that. Okay, fine. So somebody who is a short term, like they want to make short term profit but quicker,
sure.
then that goes in your favor. Somebody who wants to buy and hold for long term, then the other one goes into your favor.
Well,
Like,
they both go in your favor. Again, I almost hold everything that I buy.
I
And
see.
and so I look for value add, because now you have less money in the property, and so less of your capital is tied up, and then it's going to go up in value. And so, yeah, I like to hold on to that. My hold properties, I got into it at an amazing price. I was able to renovate it at a low budget, and so I don't have that much money in it, but it's paying me the most, instead of tying up a lot of my capital into something that I can't renovate, and then it just gives me a little money, because I had to pay more money for it.
I see. Okay, so it's a trade off basically.
Yeah.
It's a
Well,
trade off.
one is just easier. Some people don't want to be part of the renovations. Some people have capital, but they don't want to be part of the renovations, and maybe the risk of a budget not working out, going over budget, stuff like that. And so they want a property that's already renovated and just going to be more easy money. That may work for their situation more. And so it really depends on the individual.
It really depends on the individual. Okay, fine. So, what percentage of time do you find that situation doesn't work out for them, and what percentage does work out for them?
Well, I mean, people that I work with, I don't have too many that it doesn't work out for, because I teach them. I learned through mistakes. So I've been buying and selling and developing real estate since the mid 90s. And a lot of that, I didn't know what I was doing. And so, I made a lot of mistakes. And, so by doing that, I learned what not to do. But on the flip side, I've also learned now what to do. And so, when I'm helping somebody, I can help them avoid the mistakes that, it cost me so much to learn.
Yeah, I totally understand that. And so, your mistakes that you made, and how long have you been doing this so far?
I've been doing real estate since I think I bought my first property in 1997.
1997.
Yeah,
Whoa.
yeah,
I'll have to think. I think I was at that time, I was still, I told you my story, and I came here from India, and then I was in the financial world from
yeah,
94.
yeah.
I wasn't bad. I was pathetic. I was still in the pathetic stage when he started that. So I couldn't sell anybody for 6 years. So that would make it until 2000. So that means I was still in a pathetic stage. And so,
Okay.
so I'm so glad that you found something that actually works for you. So when you started in 94, what are some of the conditions you're seeing that's different today than you saw in 97?
Well, in 97, I bought my first property. I didn't know what I was doing. And
Okay.
I ended up doing a no money deal, the stuff that I do every day today, but I
Okay.
didn't understand it. And I just kind of stumbled into it. I
Yeah.
bought my father's house
Hmm.
and I didn't have money. I didn't have credit. I didn't have anything. Most people would have just stopped at that, but I really wanted that house. I lived there as a child and I wanted to buy the home and so I just had to figure it out and I was determined and that determination just led me to eventually find someone that said, okay, let's figure out how to make this work. And he helped me figure out what to use as a down payment, how to bring a partner in for the credit. And but I didn't understand what I did. I just all I knew was I got my dad's house. And now that I had my first home, but I didn't understand it. And then I said it was another 10 years until I bought my next property. And then that was another no money deal. But I still didn't understand it. I found something on Craigslist and it was a seller finance and he didn't want very much money, $1,500 was all I needed to put down. And so I was able to get into that one. And then after that, I sold that, made a little money. And then after that, just I was buying. I didn't know what to buy. I didn't know how to buy. I just wanted to be part of it. And that's when I made all my mistakes. So, but what differences did I see? Well, there was the big bubble that happened in the the mid 2000s, and then the crash came. But again, I didn't know what I was doing to take advantage of that crash. So, I just was been learning by trial and error. So I've seen the market, blow up with the bubble, crash, build back up again. Now the high interest rates. But again, as long as you really know about buying right, that's the secret. You got to buy right and you got to just look for those where you can get, no matter what the market is, if you're able to buy it right in those conditions, you're going to do okay.
Yeah, and so basically, like if they say, even Warren Buffett talks about this, that timing is everything, and just have to make sure that you are timing it correctly and making sure that the deal makes sense,
Yeah.
and there's upside potential. Because I remember I bought my house in 2003,
Okay.
and it was a downturn at that point. It was a slight downturn in real estate.
Sure.
And then people bought 2005,
Right.
2004, 2006, 2000, it just kind of like kept on going up until 2008 crash
Yeah.
happened.
Exactly.
Right? And so people who bought at 2007, latter part of 2007 or somewhere in the range of 2007, really got crushed essentially.
Yeah, yeah. Well, they did if they sold. It
Yeah,
eventually rebounded.
yeah,
So you don't
yeah,
lose until you sell. You don't gain until you sell. You don't lose until you sell. You
yeah,
sometimes, if you happened, because you never know. That people didn't know that was going to happen when it did. So
yeah.
you don't know if you just bought at the height of the market. But if that's what you found out you did, you hope to be positioned so that you don't have to try to sell it and
Yeah.
lose money. So it eventually rebounded, and those who were able to stick in there and hold it ended up doing okay.
Yeah. And so your students that you have,
Yes.
right, and the clients that you have, and maybe employees that you have, how do you get them prepared to deal with downturns? Because downturns will happen. It's not that if they're going to happen, we both know they will happen. So the question is, how do you prepare them so that when that does happen, they don't freak out? Because emotionally, when I do a lot of my transformation work or breakthrough work, what I find is that if you are a scared person,
Right.
you're going to amplify the emotion 10 times more when crisis hits.
Exactly.
So, how do you prepare people for that? Because that's going to happen. The fear, anxiety, uncertainty, all that creeps in, and then go, I don't know what to do. And they feel like they're stuck and they feel locked in. So, how do you prepare?
Well, we haven't had to face it yet. I haven't had anybody that's had to face a crash and try to weather it. But
Okay.
with a lot of the buy and holds, when you've got renters in there, so a lot of the people that I'm working with, they're trying to build up some passive income.
Yeah.
So, that crash didn't wipe out the rental market.
Mm-hmm.
And so the people who had been able to get the properties, get their tenant in there, get the rent come in, and you did all of your factors based on that. Well, anybody who was able to do that still weathered that crash. That crash really affected people who were holding onto the properties, was hoping to sell them. But if you were building up for passive income and you're getting your renters in there, that can offset a lot of that.
I see. So it depends on, okay, so if you're buying it to sell it quickly, there's a risk because you're looking to get cash out really
Yes.
quick, and I'm gonna assume you're gonna put that money into some other property, pretty
Right.
much, right?
Right.
And that's your game plan. It's nothing wrong with it, I don't think, but it's your game plan,
Sure.
and to just overturn properties.
Right.
And when the crash happens and you're stuck in property or properties,
Yes.
that's when you get in trouble, basically, because you don't have the capital at that point.
Now the rent, that's exactly true. Now the rental market, now that one took a hit during COVID because
Okay.
a lot of people were out of work.
Mhm.
Rentals got put on hold, but people still needed to make their payments.
Mhm.
So that was a difficult time for renters at that period. And no one could predict that. We didn't know what was going to happen. Everyone tried to get through that the best they could.
Right.
But again, if you can just try, if you bought it well enough, you're not over leveraged, and you've got your rents coming in. Again, you couldn't predict COVID was going to happen, but that's been the only thing really that has kind of wiped out that rental market the way that it had. Other than that, you can usually offset it by having good renters.
So renters, what you're saying is the renters market is more safer than flipping market, in terms of risk wise is concerned. That is more stable, essentially.
Yeah, I think it can help you hedge against the market fluctuations of the housing value if it takes another plummet again, because your renters are still going to be in there. You're going to be getting your rent, and that's not really going to change because house prices dropped.
I see. Okay. And
And
then, and so, okay, let's suppose that you have this rental property. Okay.
okay,
You're renting it out, and now the tenant cannot make a payment. Okay.
right.
How do you handle all that, like maintenance, tenant collecting rent, and things of the nature? How do you manage that?
Well, I manage all my own properties up to this point, and
Mhm.
you know, I'm really it's a business to me,
Yeah.
and you have to run it that way. And I tell people when I'm renting to them that this is a business, and rent is due on the first. You have till the fifth. After the fifth, a late fee kicks in, but so does a 5-day notice to vacate. And I said it's nothing personal. It doesn't matter whatever story it is. This is a business, and that is just the procedure that it goes. And you have to have your procedures in place with maintenance. I take a portion of every month from the rents and put it aside into an account to be able to cover any expenditures that are coming up ahead. So you just have to run it like a business and just play it safe.
Okay. And what have you found to be okay? So let's say that somebody's making a deal. It's a 1 unit apartment or 5 unit apartment or 10 unit apartment. What I've heard rumors in the industry,
Okay.
at least people I've spoken to. Obviously, look, I'm not doing any real estate investment. The only real estate I have is my house. Okay,
Okay.
so that's But people have said, more units, the usually bigger deals are easier than smaller deals. Is that actually true?
You know, it really depends, but it can be. It can be.
Okay.
The it for the people that know how to do it, yes,
Okay.
I believe it is. I believe it is. If you don't know how to um, y- structure buying a multi-million dollar property,
Hmm.
then it's going to seem so foreign to you, and whenever you're trying to pursue it, everyone's going to know that it's foreign to you, and it's just not going to go. I had that happen to me on a property that I bought. If I had that property today, I'd have done so well with it, but it was one of my first value add rehabs that I had gotten. And
Hmm.
I owned the property 100%. It would have today it'd been so easy to make it to I would have used it with the bank. I'd have leveraged what I had. They'd have given me my construction budget. I would have had it had it renovated off using the bank's money, leveraged against my property. And then, after the renovations, then I would have either sold it or whatever the course of action at that point would have been. But I didn't know all that language like that. I didn't know that it would be so simple. And it would be so simple today. It would absolutely be simple. But then, because I didn't know it, I wasn't even able to get it done. I ended up selling that property at a loss. And
Mm.
and today, I mean, it would be so easy to get it done. So, yes, if you're familiar with it, yes, it's easier. But if you don't know it, then it's hard to do what you don't know.
Yeah, and so, like, what is some of the languaging that somebody should look out for when they're doing these kind of deals? And specifically, like, what they get caught in, like, like surprise, so to speak.
Yeah, well, I anything you're getting involved in, you should, research it thoroughly. You should learn, exactly what you're doing. I don't advise anybody just to start putting their money into stuff blindly and not having some idea of what they're doing. So, with the internet today, with AI today, all your questions can be answered. So, and with AI, you can just ask AI, to answer questions you don't even know to ask. And
Mm.
so that's the beauty of AI today. So, so anybody wanting to get involved today, I heavily, recommend that they use AI as much as possible to learn what they don't know, because AI will teach them. But that's my advice. I wouldn't do anything without knowing about what you're doing.
Yeah, I love that. I love that. And so, when it comes to the contracts, right? In terms of understanding, and really understanding, like, how you work.
Sure.
You're saying just ask AI. That's it. Like, literally just ask AI. Hey, what are something I should be asking for or looking for? Essentially.
Yeah, you can ask AI. You can say, what should I know, about this type of property or this type of, investment? What should I know? And AI will give you a good basis to begin with.
Right.
The person that bought that triplex,
Mm-hmm.
he wanted to know, you know, about the contract. I said, "Well, take the contract, and this isn't the final. I in my book, I really stressed the point of, when you start doing contracts and anything legal, you should always seek legal advice. But in the beginning, I told them a starting point. I said, take the contract, run it through AI, and ask AI from the buyer's perspective, does this seem, well aligned? Does this seem out of proportion? Get AI's take, at least enough to give you a starting stance, where to begin. So AI is very helpful.
Okay, I like that. And are there like places that people can go? Let's suppose that I'm the kind of person I really don't want to get involved in any of that,
Sure.
and I just want to put money into real estate, right? How do they go about doing that? Because physical real estate, I understand, but there's also a virtual world out there that somebody can take advantage of pretty easily. It may or may not make as much, but at the end of the day, they at least have something.
Yeah.
So how do they do that? And what's the minimum required?
There's real estate investment trusts. I haven't used them. I'm not part of any. Everything
Hmm.
I do, I'm hands on with. Any of my
Yeah.
partners that I work with, it's all hands on. They're passive investors, but they invest with me, and so they actually know. But there are trusts and different funds where people can, you can Google it, and there are already organizations structured that you can invest in, and they take it, they invest in properties, and they give you a return on your money, and you don't have to really do anything more than that. So they are out there. It's just not part of my wheelhouse. It's not what I use.
Okay. So there is they're called REITs, correct?
Yeah, exactly.
Real estate investment trust. Okay, got it.
Yeah.
So what's the advantage or disadvantage of having real estate itself
Okay.
versus being part of conglomerate like REITs?
Sure. I think some people can look at a REIT and maybe it's a little safer.
Hmm.
They hedge they spread your investment over, multiple properties. And so what you're looking at isn't based on one particular property, but with that safety is less return as well. And
Mm,
so, and someone else is handling it and they're going to pay you a portion of what they're making. And so, with what I'm doing, or if somebody gets involved, actually hands on, I mean, you get to be, 100%.
I see. So instead of making portion, you make the full percent. But do you
Sure.
get the same advantage of tax write-off when you have REITs versus an actual property, or is that all like really changes?
I'm not an accountant, and
Yeah, of
so
course.
I don't even, venture in that world. But I'm sure there are some, with real estate, there's lots of tax advantages. But again, I've never worked with a REIT. I haven't done anything in that direction, so I don't know the advantages or disadvantages of that.
Okay, no problem. I totally
Yeah,
understand. Okay.
yeah.
By the way, I love your background. I think I
Thank you.
told you when we had a pre-interview. I love your background. I love what it says. The harder the conflict, the more glorious the triumph. Right. So
Yes.
I love that. I love that in the back. So thank you so much for because it's really amazing.
Well, thank
Um,
you. Thank
you're so
you.
welcome. So tell me a little bit about your personal life, my friend. You're married, you have children.
Yes, yeah. I'm married. I have one son.
Yeah.
I was a single parent for almost all of his life, ever since he was 5.
Mhm.
And he's older now. He's already been off to school, got his master's
Mm.
degree, lives over in California. He's now involved with real estate as well. And so he's over there in
Oh,
California, doing it out there. So I'm originally from Detroit, now in Oklahoma,
okay.
and I like it here. I didn't never Oklahoma was never on my radar. It's just one of those places I never thought I would be. But now that I'm here, I understand why people like it so much that actually live here. It's a really nice place.
Whoa. That means I must visit one day for sure.
Yeah, yeah, it's really
Yes,
nice.
yes, yes. I've heard so many people actually talk about like they were in one place and they just moved, they just went there for vacation or something simple, right? And then all of a sudden they're like, oh my God, I feel home. And they
Yeah.
just stayed. They really didn't think about leaving per se. Okay.
I
So
thought I was going to be here temporarily. Somebody
mhm,
asked me to come here and look. There was what's called opportunity zones,
yeah.
and those were like a place to offset capital gains taxes, to to encourage development in certain areas. And I thought I was going to come in here, do something like that, and then relocate back to California. But once I got here, and I just think I'm in the right place at the right time.
Yeah. Hey, you know what? I tell you something. Right place at the right time is so crucial. I mean, I think
Yeah,
that it's a I, it just is important, so to make sure you understand, to trust your instinct, because I think many people don't trust their instincts,
sure.
right? And I was talking to somebody today. They're a business owner and they're trying to make the decision, and the answer is right in front of them, and they were not trusting their instinct.
Right.
So how important is it to trust your gut specifically, or should you go just based on your gut, when it comes to real estate?
Well, it really depends on how much homework you've done beforehand. It really does. You can't just come in like if I just took on somebody today, a new novice,
Mhm.
and they just said they just had a feeling their gut tells them they should do this, but it's contradictory to what I'm with all my experience, what I'm trying to advise them to do. I
Yeah.
wouldn't encourage them to follow their gut instinct. So
Mm.
but now, if with me, I've learned by losing. I've had ups and downs. I've made mistakes. I have a lot under my belt that I have a gut instinct now, but still,
Mhm.
I don't I don't let a particular feeling about a property. Again, I told you I run this strictly as a business, and
Mhm.
so when I look at something, I research it as thoroughly as possible. I look at the numbers, and I let the numbers, tell me more so than what my gut tells me.
I love that. So don't just trust your instinct in this case. Trust your instinct, but at the same time, make sure you do your homework
Of course.
that's necessary. So basically, what you're saying is, you are really, you have a system in place, and that system must be followed. You might love something, and you might say, "Okay, oh my God, I love it, and it's so great, and I think there's a potential here." But you always verify that with a lot of you know facts and figures and things of the nature, right, in the background, and then you can say with more certainty that this is actually for me. I like this, it works for me,
Sure.
and then I can go with that. So I
Sure.
think that many times people miss that though. Like
Yeah.
I would say, like so many times I find that people are in bad situations, usually don't take themselves through that process, and they go, I just trust my instinct. And
Right.
that's good. You can trust your instinct to a degree, but at the same time, you have to take a pause. And what you're saying is take a pause, like literally let your yin and yang energy meet and come in the middle and literally take a pause and say, Namaste, I love you, I appreciate you, but I want to make sure that I do my due diligence that's necessary and using both my energies on both sides. So I love that.
Well, you had said something that's important there, and it's the system. You can't do this without having set systems in place, and you develop these systems. So put your trust in the system and let it do what it was designed to do. So
Mhm.
and I rely heavily on that.
Yeah, and that's when anything, like if you look at anything, that's when it becomes scalable. Otherwise, like you're just doing like mundane things over and over and trying to figure out why is it not working for me per se. I would assume that's the difference between a successful real estate investor or real, versus not. I'm going to assume, right? Where naive or somebody who just looks at something and gets really excited and buys it,
Yeah.
and they don't really have a process to mitigate a lot of the risk factors that are necessary, and not understanding themselves and their, like your early days, right? You just bought because you thought it was a good idea, and perhaps you looked at the property and went, okay, 0% financing. You did the best you could at the time based on the knowledge you had.
Right.
But I would say that was, a little bit of a risk, not too much of a risk, but a little bit of a risk. you know so what would you say to the people who are listening today, that when they go to buy real estate, right, what should they do or should not do, in terms of when they're buying or selling for that matter?
Well, real estate's an amazing place to like you said at the beginning. I think more millionaires have been made out of real estate than anything, and I think definitely that holds true to billionaires as well.
Hmm.
And so, real estate is a great place to be able to put your money. It's always going to be here. And so, I highly, highly advise looking into it. But, don't go into anything blindly. Do your research, learn about it. Again, you have AI that you can utilize, greatly. Ask it questions and say, what should I know? I don't know anything. What should I know about this? I want to invest maybe in fix and flip, or maybe I want to invest in an apartment complex and get just passive income coming in, and what should I know? And, just start there, but don't go into anything blindly. But I highly encourage people looking into real estate.
I love that, my friend. So thank you so much for that. And I would love to, like, first of all, I want to say thank you. I appreciate you very much. I love the conversation.
Hey,
And I
thank
could
you.
go on forever. I mean, we could go into details and numbers and all that stuff, right?
Right, right.
But we both know we don't have enough time for that. So we appreciate those of you who are listening. I appreciate you guys. I just want to let you guys know I love you very much, and I just want to make sure that I make a difference in your life, and so does Dave. And I want you to get in touch with Dave. So Dave, if you can please share how can they get in touch with you if they decide to, or so forth.
Well, right now, to any of your listeners, I have a book that I've written called The No Money Millionaire: How to
Okay.
Build Wealth Through Real Estate Without Using a Dime of Your Own Money. And for any of your listeners, Ash, they can go to my website at nomoneymillionaire.com, and they can get it right now for free. It's a free digital download to any of your listeners. So there's no reason that they can't get it. Start learning. I try to cover all of it from A to Z. And it's a great place. It's a great place to begin to start getting some knowledge. It's at nomoneymillionaire.com, and get your free download, right now. And if you're trying to reach me, you can just Google No Money Millionaire, and you'll find me. You'll find my Facebook, my YouTube, Instagram, all of it.
I love that, my friend. Thank you so much for that. So those of you who are listening, I want to say, look, when you're buying real estate, or if you're thinking about real estate, get professional help. It will be my highest recommendation. Me personally, like, I if I'm gonna go into it, or if I decide to go into it, there's two routes at this point. There's a route of like me physically doing it, just like
Right.
Dave is. That's one route. Or second
Right.
route is putting into something that's already somebody who is already doing it, they're successful at it, and you're getting some money out of that. So there's a less of a day-to-day involved, but there's a less return as well. So you decide whatever that you want. Obviously, none of us, me or Dave, we cannot give you any financial or tax advice or legal advice.
Exactly.
That's totally up to you on what to do and what not to do. It is your money, and it is solely your responsibility. What I find over the time, Dave, is that people think, I mean, they hear these things about money is energy and money flows and money just comes to you.
Right.
And it's all true,
Yeah.
to a degree, but at the same time, who directs the money? It's you, right?
Of
And I
course.
think they forget that. I think that people just forget, who actually is directing the which energy. What is like the central hub, or the what they call a in the electronic world, like a what they have on top of the roof, or roofs, where they generator, right?
Oh,
You are
yeah.
the generator,
Yeah.
right? You are
Yeah.
generating that electricity, and you are distributing that electricity, and that is up to you. So your financial electricity is totally up to you on how you distribute that thing. It's got nothing to do with, I mean, flow is very important, and I think it's very crucial. And once you learn to how to flow properly, and you will find your zen in potentially in real estate or something else. But my wish to the universe, that may it give you all the health, wealth, and happiness that you deserve. Be sure to visit, this when you visit this podcast on my website, financialchakras.com. Be sure to like, comment, share this podcast, because I believe there's so many amazing nuggets that Dave shared. Because I believe that, go into investment fully, do it openly, do it honestly, run it like a business. Investing is a business. That investing is a business on the side of the people who are selling you investment.
Right.
And as a you as an investor, as a client, it is your duty to do the due diligence that's necessary before you do anything. And again, we cannot give you financial advice or legal or tax advice, but I can tell you one thing for sure, that you will find more peace and more certainty when you understand the magic, logic, and science, and you create your own conviction. Just like Dave has created, he went into with the magic of understanding that, okay, real estate is fantastic thing, and I think it's going to work for me. And he jumped in with no money down. And then he created his own little logic. Okay, it works like this, it doesn't work like this, it works like this, doesn't work like this. And then he created his own science. and his science, his way of his system, his process, and then he simply trusts the process. And every time I tell you, whether you follow real estate or you follow something else, you follow that formula, you get to a place where you're convinced that whatever you're doing, it works most of the time. Nothing will ever work all the time, but you will have a lot more conviction and you'll be able to go forward. You might be stuck in your life, you might be going downwards in your life, you might look at your life, look back and go, oh my god, I have not achieved anything. You master this, a simple formula of magic, logic, and science. You'll find your conviction, and once you find a conviction, you'll move forward like a lightning speed. And just like Dave did, when he found his passion initially, he just dabbled in, didn't know what he was getting into. Then he bought his second property many years later
Right.
because internally he went through a lot of emotions. Right? Was this the right decision? Is this good for me? Is this not good for me? Oh my God. Like, whatever feelings he was feeling, thoughts, beliefs, and actions that he was going through internally, he went through it internally within his energetic selves, his chakras, and so forth. But eventually he found his space and he says, okay, and now I understand it. And he went in after that. So he believed in the magic where he was just dabbling. He believed in the idea that this actually could work and he tried it. So don't let yourself be perfect. Believe in the magic and just go for it at first. Just mitigate the risk that you're taking so that when you do go in, when it doesn't work out for you, you can take another shot and not get wiped out. Because in the chase of your dream, which is to be a multimillionaire or billionaire or whatever your dream is, okay, in the chase of that, make sure you don't run out of energy fast. Because though if you run out of cash, in this case energy is cash, for
Right.
specifically for real estate, or correct, Dave?
Yes.
Yeah, and if you run out of cash, you have nowhere to go. So my suggestion would be, just take heart, go for it, like understand exactly how it works, and go to Dave and go to nomoneymillionaire.com and be sure to visit that site so you can learn and free downloads. Oh my God! Like,
Yeah.
whoa, I'm gonna download that for sure. Like, so.
Yeah.
So thank you so much for that, Dave. I really appreciate you, my friend. Okay, so thank you so much for joining me today. I really appreciate you, my friend, and I just love the topic today. Thank you.
Ash, thank you. I've loved being here. Thank you very much.
Thank you so much, my friend. Thank you. Okay.
Thank you.
And those of you who are joining me, I really appreciate you. And thank you so much for listening to, Financial Chakras podcast, Abundance Through Alignment. And my friend, I want to let you know, I am so interested in bringing you so amazing topics. So be sure to let me know in the comment section exactly what are the topics you like so I can bring it to you. I can have amazing conversations like I had with Dave and bring you some nuggets that you probably didn't think about before. So, and yes, as you know, none of this is prepared. It is a total, like, off the cuff conversation. So it stays pure and there is no pre-made content. And that way it is raw and it's real. And that is the way I like to deliver. So namaste and thank you so much. And I'll see you next time. Namaste. Thank you.